Good day, ladies and gentlemen. As always, it is a pleasure to speak to you. I will begin with the comments on our Q4 performance and then talk about the demand scenario and an update on the execution of our strategy that I give every quarter. In Q4, we delivered 1.7% growth in revenues on constant currency basis towards the upper end of our guidance of 1 to 2% and 2.7% growth in USD terms. For the full year FY17, we delivered 7% revenue growth in constant currency and 4.9% growth in US dollar terms. Let me talk a little bit about the demand environment. While traditionally Q1 is a soft quarter for Wipro, Q1 in FY18 has its own set of challenges due to the uncertainty of the US healthcare industry and the structural disruption that is happening in the retail segment. We believe that Q1 is not a reflection of the growth potential of the rest of the year. We anticipate that the growth momentum to return in Q2 and expect to be industry-leading growth rates by Q4 of FY18, as we have mentioned before. Our confidence of the recovery stems from the expectation of HPS, the acquisition that we did, which handles the Obamacare business, to bottom out in Q1. Our India business restructuring to get completed, and BFSI accelerating, and energy and utilities picking up. If you remember, we had indicated that E&U will start growing from Q1 FY18. However, we saw growth in Q4 itself in the reported numbers this quarter, and we expect to see a continuous growth trajectory. Now, let me give you an update on the strategic themes. So Wipro Digital has significantly scaled since its inception, and we continue to win deals and downstream engagements that leverage our deep capabilities in this space. In FY17, digital ecosystem grew from about 17.5% when we first reported it to 22.1% this quarter. Similarly, our consulting revenues grew from 4.9% in Q1 when we first reported to 5.6% of our IT services revenue in Q4. Let me give you an example of the kind of engagements that we are doing. An international airport operator has awarded an engagement to Wipro that involves research on passengers and various stakeholders involved in airport operations, creating passenger journey maps and identifying opportunity spaces to improve the airport experience of passengers across their presence in an airport. We are also working with clients on many emerging technologies. We have won an advisory deal with a large European energy and utilities customer to evaluate the operational readiness for production rollout of their blockchain-based solutions. In line with the growing demand of the digital services, we continue to augment our workforce in digital skills. Against the annual plan of training 33,000 employees that I had talked about in digital skills in FY17, we trained 39,600 employees. This takes our overall number of digitally trained employees in Wipro to 61,000, which enables us to deliver a large number of digital engagements for our customers. Let me talk about client mining. I'm pleased to note that the number of customers in the greater than 75 million, greater than 50 million, and greater than 20 million buckets have all increased by one each. As you notice, the top 10 client bucket has grown 2.9% sequentially above company average. Client mining continues to be a key strategy for us. Our initiatives to put together our offerings as integrated services and the delivery experience delighting our customers through various levers of hyper-automation and transformation have resulted in our net promoter score to improve by 740 basis points in FY17 over FY16. An Australian broadband network operator has acknowledged Wipro for providing win-win solutions and investing in their long-term success. We've won another mining deal with an American retailer and pharma giant. The scope of work involves application development, QA services, analytics, and mainframe across IT and business for the client. In the beginning of the year, I had talked about the Adroid program, which all of our delivery leadership is undergoing. 1,000 delivery leaders have completed this program over FY17. Let me talk about non-linearity. We continue to invest in non-linearity and intellectual property in form of products, platforms, frameworks, and solutions. Wipro Homes, our artificial intelligence platform, continues to be the differentiator at the marketplace. A use case of Wipro Homes has enabled us to win a very marquee deal with an F1 racing team. Wipro's IP solutions are designed to tackle some of industry's complex challenges. Let me introduce to you one of our differentiating intellectual property called Data Discovery Platform, or DDP. The DDP is an integrated platform capturing and managing data to generate actionable insights through advanced predictive analytics, offering cost, performance, and time benefits. It accelerates the time to insight for an enterprise using pre-built industry apps, including advanced visualization, thereby enabling faster decision making. In Q4, we have onboarded over 5 customers across industry verticals on this platform. One example is an American medical technology company that has chosen Wipro as its preferred partner to enable its advanced analytics journey. We will leverage the DDP to build data lakes and analytical use cases for the clients using statistical models and algorithms. At the end of FY17, that is as of March 31st, 2017, we have applied 1,662 patents, which is a net increase of over 50% from last year. Let me talk about hyper-automation. We continue to scale the deployment of instances of Wipro Homes, our automation platform, across all of our customers. In FY17, we generated productivity worth 12,000 people across 140 customers in over 1,800 cumulative instances of homes that was deployed. And this is in areas across application, support, maintenance, and infrastructure services and business process services. Our focus on localization continues in all the key markets. In Q1, we expect to be more than 50% of local employees in our biggest market, which is United States. We have been significantly investing in US in terms of increased hiring, setting up of delivery centers, and focusing on our sustainability initiatives, especially in the area of education. In US, we have further enhanced our capability by adding 2 additional client delivery centers. This is a multi-client delivery center, one located in Mountain View, California, which is our new hub for next horizon technology and collaboration with our partners and our clients, with focus on creating highly relevant advanced offerings for US customers. We have added another center in Farmington Hills, Michigan, to offer best-in-class engineering services to our automotive customers. The center is predominantly staffed with talent from the local community area in the Detroit region. Our partner ecosystem continues to be very vital to our strategy, and M&A continues to be an integral part of that strategy. We consummated the InfoServer acquisition in early April. That is a company in Brazil, as we had announced. Appirio had its first full quarter as part of Wipro, and we are incredibly excited about what it brings to our clients. We had numerous wins with Appirio, including 14 synergy wins in Q4 in Wipro customer base. We completed the divestment of Eco Energy and received a sale consideration of $70 million during the quarter. Wipro Ventures completed 4 minority investments, plus a follow-on one in the last 12 months. We are leveraging the capabilities of these investments, and by now we have 10 commercial engagements across a number of our portfolio companies in areas of cybersecurity, customer care automation, business process automation, and big data lifecycle management. I have previously spoken about our Horizon program, which is the intrapreneurial program for our employees. In FY17, 11 new employee ideas were approved and funded and a total of 15 ideas incubated in areas of artificial intelligence, cyber security, digital, IoT, Industry 4.0, and software-defined everything. We successfully delivered around 40 pilots and POCs to our customers. In Q4, we approved 3 additional themes in the area of artificial intelligence, Industry 4.0, and digital. Overall, I'm confident that we are making the right investments, we are executing well on our strategy, and we see the trajectory shift starting in Q2. I will now request Jatin to cover the detailed financials. Thank you.
Good evening, ladies and gentlemen. I am very happy to share the detailed financials of Quarter 4 or FY 16-17 and the full year ended fiscal 16-17. The gross revenues of Wipro Limited for the year was rupees 55,040 crores, which is a growth of 7.4%. And results from our operating activity, which is EBIT, was rupees 9,388 crores for the year. Our IT services segment in constant currency grew 7%. This year was a year of strong cash generation. We added significant operating cash flow due to better execution. Our growth for operating cash flow year on year was 17%, and it was 109% of net income, among the highest that we have had. The gross cash position resultantly was rupees 34,474 crores or $5.3 billion as at the end of 31st March. And if you recall, our position as of 31st December was roughly 400 million lower. So we have added close to $400 million of cash flow to our cash balance during the course of Quarter 4. Our net cash position as of 31st March was $3.1 billion. And therefore, the net debt on the balance sheet was $2.2 billion, roughly $100 million lower than what it was as of 31st December. I am happy to share that the Board of Directors have recommended an issue of bonus shares in the ratio of 1:1. And the Board of Directors will consider a proposal for buyback of equity shares around July 2017 period. Now let me move to the quarter. The gross revenues for the quarter were rupees 13,988 crores, which was a sequential growth of 2.2%. And this growth in constant currency was 2.7% sequential against in reported currency was 2.7% sequential. In constant currency, it was 1.7% sequential against our guidance of 1 to 2%. In a quarter that reflected volatile currency, we did reasonably well on our forex performance. It helped us report superior reported revenue, as well as it helped us report slightly better operating margins. Our hedge book as on March 31st stood at $2.5 billion. Digital ecosystem, which was 17.5% of our IT services revenue in Q1 of fiscal 16-17, has grown to 22.1% of IT services revenue by Quarter 4. As you can see, this is a significant improvement. Some other highlights of the quarter are as follows. Net addition of the employees was 1,305. Our gross utilization is at record high. It has improved 150 basis points sequentially, and now it is 73.1%. It is also a quarter where we recorded very low attrition, which has reduced to 14.8% from 15.4% in quarter 3. Our revenue from fixed price projects continue to grow. They are from 57.7% in Q3, they have grown to 58.3% in quarter 4. The number of customers in greater than 75, greater than 50, and greater than 20 buckets all have increased by 1 each sequentially. Some color on our SBUs, service lines and geographies. Manufacturing and technology grew 5.3% on quarterly basis on a reported currency basis. Finance solution grew 4.4% sequentially on reported currency basis. Geographies, Europe grew 6.4% on sequential basis on reported currency basis, and Americas grew 1.4%. If you see full year, we had between 8 and 9% constant currency growth in both of these large markets, and therefore we feel that we are exiting FY17 in a good state in 2 of our large markets. On service lines, application services grew 5.5% sequentially on a reported basis, and global infrastructure service grew 2.4%. Overall, we had a very satisfactory quarter vis-a-vis the guidance that we had given in the beginning of the quarter. Looking ahead, we expect the revenues from our IT services business to be in the range of $1915 million to $1955 million at the exchange rates which are mentioned on the slide. And we have some detailed financials in the rest of the deck. From here, we'll be happy to take questions. Thank you.
Hi, Abid. Chandra here from ET Now. I have a couple of
questions. I just want to
questions.
understand from you, though, in fact, in your commentary, you've gone on to say that in spite of the guidance that has been given out, that the rest of the year is going to be fantastic, and perhaps you'll be getting back to industry growth rates by Q4 of FY18. Really, what is going to be firing for you to even say that you'll be getting back to industry growth rates by the end of FY18? Other than that, also, if you can give us some sense of where is the India business restructuring happening, and also some sense of what is happening as far as US healthcare market goes. Thank you.
Your question itself. So, as you know, the guidance that we give for the quarter is what we see at the beginning of the quarter. And clearly, we have had certain project cancellations in our healthcare business, which will have an impact in Q1. We continue to see some softness in the retail, which is a structural softness in the market, which does have an impact in our Q1 guidance, which has been incorporated. Our India business restructuring has been going on plan and schedule, and we see clearly that from Q2 onwards, the effect of that will become visible. The headwinds that we see right now in the healthcare business will get done, and it will get bottomed out, as I mentioned, which again gives us good confidence on the overall year trajectory.
Jatin, in Abid's remarks, he went on to say that you will be looking at localizing at least 50% of the talent in the US is going to be local. Really, in terms of margins impact and the cost that you would be incurring, has that been factored in for the rest of the year? And, you know, even going forward, the guidance that you would be giving quarter on quarter, would have been factored in?
So our localization effort are not to build cost structures which are not deployed. Typically, we start this localization effort along with our customers, and therefore most of this is consumed as part of our ongoing cost of operations, and therefore I don't see any incremental impact on operations because of one-time expenditure or creating large benches around.
Abid, just want to understand your thoughts on, the executive order last week by Donald Trump. Though in substance, I mean, no specifics, it's just, a broad order. Clearly, local hiring is a big area for you, but your reaction to that and what it will mean for operations, over the next year. And, I'm still not able to understand because you've mentioned two specific weaknesses that will pull you down in Q1, which is one is healthcare and one is retail disruption. How do you expect the reversal to come about, in Q2? Because you've ended your speech by saying that we expect the trajectory to differ in Q2. So do you expect some clarity in regulation to come about, or are you waiting for some contract to end? And a lot of talk about layoffs in the last week. Is this different compared to what you have undertaken in the previous years, or are the numbers higher this time because you've also sort of increased the pace of automation? Again, Abid's speech spoke about, productivity worth over 12,000 persons. So just want to understand if the effect was felt more strongly this time around.
So let Abid answer first, or should I?
Go ahead.
Okay. So first of all, you see the data sheet and take a number of people we've hired in the full year. Year to year, we have seen an increase of nearly 8,000 people, net adds in the company. So hiring is going on as planned on campuses. We are hiring for newer technologies as required. Business requirements also we are making sure we are fulfilling. You heard from Abid about the localization drive in the US, and we are driving that very hard. So very clearly, it's just getting blown. I think every year we do appraisals. It's a part of this thing. People sometimes are not happy with the ratings and stuff. And in that base of people leave or people stay back. So I don't think we should just look into that much and focus on from the growth perspective, I think.
As we have said on the executive order that you asked, that we believe that mobility is essential to global trade. And any regulation in any country that happens should not be discriminatory for any particular industry. And I think we are working with the government of India and NASCO to address some of the issues that we see as part of what is developing. As far as Wipro is concerned, we have been investing almost, since we have started talking about the 6 themes. One theme has been localization. Because in the long run, we do believe that in every market that we work, the kind of work that happens going forward will need a lot of local talent to be available in the market. And that strategy has played out very well for us because we were proactive in doing this. So as I mentioned, in Q1, we will be over 50% local in the US market. And based on that strategy, the impact on Wipro of any such changes will be limited. Our clients have accepted that very well, and we've got a program that works very well in terms of localization in line with client needs and the local community opportunities that exist over there in the key areas where we do business in the US. Again, on the question of future, when we look at Q1 and give a guidance, we exactly know which are the projects which are going to get over, or because of client cancellations they will undergo. They've stopped in Q4, which means they will not have the revenue in Q1. And that impact has been built into our guidance for Q1. In Q2 and beyond, we look at the overall demand environment, we look at our order book, and we look at various other parameters, which tell us how the rest of the year looks at. There are 2 or 3 specific areas for Wipro. One of them is energy and utilities business, which, as we had said, that will start looking up in Q1. If you look at the data sheet in Q4 itself, a quarter ahead of what we had commented, we have started seeing growth over there. So our execution on our strategy has been delivering the results that we have been talking about. Similarly, India business will still take a little time through Q1, but from Q2 onwards, we'll get growth back over there. The uncertainty will continue to remain in the healthcare business for the part which is related to the Obamacare work, but that has been bottomed out. So there is 2 parts of work that we do in our HPS business. One part is the new customer onboarding, if you remember, we had announced 3 new customers being onboarded after the HPS acquisition. The new customer onboarding requires a project work that happens. When Obamacare is going to be repealed, those projects start happening. The other part of that business is ongoing services of the customers. We have about 33% share of the 20 million individual clients that are there in terms of the healthcare exchanges. And that work continues. So that is an ongoing annuity activity, and that doesn't get impacted. So when we say bottomed out, the cancelled projects get over, the work continues. We have a very strong domain expertise. We have made huge investments in healthcare. We believe that when the clarity emerges on replacement of what happens post ACA repeal, we will be very well positioned in the market. So our investment will play out, and that through the year will come. It may come in Q1, it may come in Q2. Once it comes, then the payers will start investing again in the projects to be able to gain customers. And that makes us feel quite optimistic for the rest of the year.
The clarity will come through in Q1, right, as far as the policy action is concerned?
We don't know, but the open enrollment for ACA starts in November, for which the insurance companies need to have clarity by July to start making investments, because IT projects take some time to get the platform ready by November. So the clarity should come in some shape or form within Q1.
Abid, hi.
Hi, this is Hari from Forbes India. So one question, please. Can you say how many H-1B visa holders you have currently in the US, what their average wage rate is as of now, and how you expect that to change by the end of the current fiscal?
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.